Good morning, everybody. It is Thursday, June 23rd, 5:45 a.m. Central Time as I speak here. December corn futures down 17.5 cents at 676 and a quarter. November soybeans down 33 at 1443 and a half. September Chicago wheat down 13 and 3/4 at 975. September Kansas City wheat down 19 and 3/4 at 1026. September spring wheat down 16 at 1089 and 3/4. If you guys are listening on the podcast, appreciate it. Leave me a rating, leave me a review on that Apple app in particular. If you're watching on YouTube, guys, make sure you subscribe to the channel. Leave me a comment, like these videos. Let me know what's going on in your neighborhood. If you'd like some additional information from me, go to my website, www.standardgrain.com. Check out my premium subscription service, guys. I send a ton of information direct from me to my premium subscribers every single business day. Morning email has been going out about 5:30 a.m. You'll get my subscriber-only videos, my text message alerts, all of that stuff. I did a video yesterday regarding carry in the corn market, and you may say, Joe, there's no carry in the corn market. In some of the new crop spreads, there is from D's out to say March 23. You've got a little bit. I did a refresher course on the carry targets that I look for every year, and I feel like it's never too early to have this conversation and have some of those targets set. Today, I'm going to do a video regarding recessions and what happens to these commodity markets during recessions. If you guys want that video, just sign up this morning. This deal is $50 a month. You can cancel it anytime. There's no other fee. There's no other obligation. Nobody will try to sell you anything else. You're just going to get a ton of info from me and nothing beyond that. Let's get into the weather here. Nothing on the radar here this morning, pretty much blank, no big change. Next 7 days is really more of the same, dry for a lot of areas, maybe some additional rains for Iowa relative to other places. Eastern Corn Belt dry, plains mostly dry. 6 to 10 hasn't changed a whole lot, maybe a little bit warmer, but still dry for a lot of areas. Here's your big shift this morning, and I think this is largely responsible for the weakness that we're seeing in the markets here today. You've got a lot more rain in the forecast for central and western areas of the Corn Belt, specifically Iowa, southern Minnesota, Nebraska, and the Dakotas. This is a big shift in the forecast versus yesterday. You look at this GFS run this morning, and there's a lot of rains expected to come into those areas in the period beginning, say, July 1st through the 8th or 9th day of July. We're going to be dry up until that point, but during that time frame, you've got a much wetter forecast, the way that it looks to me, at least this morning, during that time frame. Now, I know that's a ways out. It's still subject to change, but this looks quite a bit different for this time frame than it did yesterday. So I think that this shift in the forecast is at least partially responsible for the shift here. We're in prime time weather market season. It's that time of year where the markets will, of course, move drastically in one direction or the other based on weather. And there's still plenty of time for this thing to go in the other direction as well. You could just as easily come in tomorrow with a bullish forecast, but I'd probably make the argument that this morning, the idea that these rains are going to be much more substantial in, again, Iowa, southern Minnesota, Nebraska, and the Dakotas in particular. I think that's a bearish factor. It's a bearish shift in the forecast, and that's enough to cause a big spike down on a day like today, and that's exactly what we've got. Now, in addition to weather, I think the trade is concerned about recession. Recession is kind of the big buzzword when you watch the news now. Jerome Powell said that a recession is certainly a possibility. When he spoke for a Senate committee yesterday, he discussed inflation, interest rates, the Fed's plan for all of this. Powell said that the central bank might be able to lower inflation without triggering a recession, but that such a task would be very challenging, and that a recession is, of course, certainly a possibility. Most commodity markets act poorly during recessions. Guys, if you're a premium subscriber, I'm going to have a video blasted out this morning regarding commodity markets and recessions. How do these grain markets in particular act during recessions? I'm going to have a lot of specifics, a lot of charts. If you guys are interested, sign up this morning. Ukrainian grain facility was struck during a Russian attack yesterday. Bunge confirmed that its facility in the southern port city of Mykolaiv, I'm sure I'm saying that wrong, was hit during a Russian attack. They said this: a more thorough inspection is required to assess the exact impact on the facility, said Bunge in a statement. Another grain company, Viterra, also said that its facility at that same port was hit. Russia and Turkey will reportedly pursue talks in regard to grain exports out of Ukraine sometime soon. And then they're still talking about this four-way meeting between Russia, Ukraine, Turkey, and the UN sometime during the next few weeks. got some trouble in the overseas ag market, so this is an additional negative factor. Soybean meal futures on the Dalian Commodity Exchange posted their worst daily decline in more than 8 years, down 5.5%. Bean oil on that same exchange down 4%. One analyst in China said this: after edible oils plunged, the whole market direction has changed. Domestically, soy meal inventories have been rising and pressure has been quite massive. Malaysian palm oil futures have also moved sharply lower during the last few weeks. That market has now wiped out all of its gains for the year. Rising supplies from Indonesia, Malaysia are weighing on prices. Palm oil demand reportedly kind of sluggish here. So I should have said this at the top, guys. I don't have any good news for you this morning. Sorry about that. Cattle market was lower yesterday, more than $1 lower in live cattle, more than $2 lower in that nearby August feeder cattle contract. And again, I think a lot of what's going on in some of these markets has to do with recession risk. We saw a big sell-off in crude yesterday. It's down again here today. It did recover slightly, but I think that this recession risk is mounting. People are becoming more concerned about it. It's maybe one of the biggest things we've got going on outside of weather in regard to the grain markets, at least. U.S. dollars higher this morning. Stocks trying to rebound. The S&P's up 28. The Dow's up 150. Bonds are up. Gold's down $7. Crude down 64 cents at 105.54. Last trade in the August WTI. Have a great day, guys. I'll talk to you Friday.